Okay, everybody, it's me, Gregory Mannarino. It is Friday, December 31st, 2021, New Year's Eve here in the United States. All right, people, on this lovely day, let's talk. Let's talk about what's going on here. Right now, and let's start off with the market. Stock futures are slightly in the red. Slightly in the red. Trading doesn't start for about half an hour. Anything can change. Okay, whatever. Let's again, people, look at the drivers. What's driving this market? First of all, let's look back a little bit. Do you realize we hit record high after record high after record high with regard to this market this year? It's been out of control. It seems the market is unstoppable, and it is, as long as the easy money keeps pouring into it, and that's exactly what's going to happen, despite the fact that even this morning, we're getting more bears crawling out of the woodwork. I don't know what the hell these freaks are looking at. We'll talk about that in a second here. Anyway, let's go back to the market real quick. Like I said, stock futures are slightly in the red. Whatever. 10-year yield 1.5. Yield curve itself looks pretty damn good to me right now. Dollar, relative strength to Dixie, flat. Okay, crude oil is under some pressure here, but still around 75.50 per barrel, talking about WTI. All right, the market's happy with that right here. So looking at the drivers of the market and the MMRI, which is under 90, look, it's not a bad setup here. And going back to the bear calls, I mean, there are bears and bears on top of bears. It's crazy. You got, so-called market timers calling for a market top, and we're going to imminently, face a market drop. Whatever. You got to be kidding me. Look, markets go up. Markets go down. We don't even get normal corrections anymore, people. And as long as the drivers of this market stay the way they are, what are we going to do? What's Greg Mannarino going to tell you to do? Well, pretty much the same thing Greg Mannarino has been telling you to do since like time and freaking memorial. Buy the dips, people, in everything. In everything, all right? Stocks drop, buy that dip. Crude drops, buy that dip. Precious metals drop, buy that dip. Cryptos drop, buy that dip too. Buy it all. Buy it all, just like the central banks are doing. What you and I are mimicking in many ways is the action of central banks who are right now in the process of buying it all, buying everything. So good. Let them play their game. We're going to play our game. We're going to mimic what they are doing. All right? Period, the end. And I'm going to say it again. Like yesterday, the pre-market report I did yesterday, I said to you, ignore it. Ignore the bears. Ignore the calls for this market to drop. Okay. Would it be so far-fetched or out of the ordinary for this stock market to fall 5%, 10%, 15%? Really? What are we going to do? Well, that's normal market behavior. Okay, we don't see it anymore, but that's normal stuff. And we'll get in here and laugh, number one. And number two, buy dips, keep some powder dry. If this even phenomenon happens, look, I don't know what's going on with some of these people, these bears crawling out of the woodwork. But I'm telling you again, the more bears I hear about, the more bullish I become, people. Period, the freaking end. Let us move forward here. Cryptocurrency is doing well this morning. Bitcoin back over 48,000. Gold and silver doing well here as well. So our only fly in the ointment today, pre-market here, is crude oil. And again, it's a random walk with an upward drift. Crude oil, in Greg Mannarino's view, is going much, much higher, much higher. The dollar is a dying asset. I think we can all agree on that. Although, like I have explained to you, the relative strength of the dollar is going to remain high relative to other currencies, but that does not mean that the absolute value of the dollar is going to continue to dissolve by design, by freaking design, people. So just get used to that. And inflation, like I said, you haven't seen anything yet with regard to that. I believe right now, if you have not taken action in this market to at least get yourself on the right side of the debt bubble, you need to do it. You need to start doing something, people. And if you could do one thing, I'm going to start saying this even more. You got to start picking up physical silver. Buy physical silver. I can't imagine a better way to be hedging yourself against the hyper bubble in debt than holding a piece of silver, pieces of silver. I got them all over my freaking desk here. Okay, that's the key. The key to this entire thing is to realize, and I know you do if you follow this blog, that the hyper bubble in debt, number one, is going to get a lot worse before it gets better. And then, again, the risk on environment is going to turn risk off. Look, markets generally run in cycles. Risk on, risk off. Risk on, risk off. Risk on, you got it. Well, we've been in this risk on mode that is cash flowing into the stock market since the meltdown of '08, since the Fed decided to start rigging the markets to the highest possible order, suppressing rates beyond anyone's wildest dreams, robbing the middle class of trillions of dollars in realized wealth, only to reinflate a stock market bubble, hyper bubble, on the back of a debt market super hyper bubble. So understanding that it's going to happen, that risk on will turn risk off at one time, and it's going to be monumental, people. When this does happen, you must be in anti-debt units. You must be betting against the debt, becoming your own central bank. You got to be ready, and you don't have to guess either. Like I've been telling you, we don't guess, you and me. We look at the current drivers of the market, and we can see where things are going to go. So when you got bears and more freaking bears coming out of the woodwork, you just laugh because you look at the drivers here. Is the debt going to stop inflating in the short run? How about absolutely freaking not? Okay, watch the Fed's balance sheet. Listen to their dog shit lies. Oh yeah, we're going to taper. Oh yeah, we're going to meaningfully raise rates. It's all lies. It's lies. It's not going to happen. Look at that 10-year yield. Watch the yield curve slope. You understand? The MMRI, which I think is, honestly, I'm going to say it again, the best risk indicator for this market that you can possibly find. And it's right on my website, traderschoice.net. Again, link in the description of this video. If you're going to follow one thing, to try to gauge risk in this market and what you should be doing, it should honestly be the MMRI. I look at a whole bunch of things, yield curve, 10-year yield, dollar strength, crude oil, paying attention to the geopolitical situation. But if you can just watch one thing, keep your eye on that MMRI. Anyway, so look, in summary real quick, like I said, trading doesn't start for about half an hour. Futures are slightly in the red, or at least they were when I started on this video blog. But the dynamics or the drivers here for the market remain looking reasonably good, except for crude oil. And if you believe that crude oil is going to drop and stay there, well, you have no clue whatsoever as to what you are looking at, nor do you understand how the markets work. Crude oil is the lifeblood of the military-industrial complex. Crude oil is the lifeblood of this market. So don't believe for a nanosecond they're going to allow it to fall in any meaningful way and it'll stay there. It won't stay there. Every drop in crude, some have been substantial recently, have been bought up and then some. So just listen to Greg Mannarino, all right? I have kept all of you, people from all over this world, on the right side of this market for a damn long time, and I'm going to continue to do that. So just ignore everybody else. I don't know what to tell you. And I don't know if you're like me, but The more bears that I hear about, the more bullish I'm going to become. I'm telling you right now. I don't care who they are. I don't care if they're big-time fund managers, Wall Street banks, supposed, market timers. They're going to be wrong as long as the easy money keeps pouring in. And it's going to for as far as you can possibly see, and then some. Anyway, with that said, people, that's it. I will see all of you at the end of the day to sum all this up. And just going to watch it all. It's a freak show. You know it. I'm out of here. See you later.